Hey fellas, I'm seeing that chat's being overrun by spams, and I like it. Anyway, hi, welcome back. I don't even know what camera I'm using. Um, yeah, we're doing a hangout today. This should be fun. We haven't done one of these in I don't know, a couple of months, a couple of weeks. I don't know. Either way, welcome guys. See you all chatting away there. So we've actually we do have a topic for today, which is portfolio structuring, right? We have people coming to us. I know actually two of them are in the chat right now, and they've asked me to kind of go over how to structure a portfolio if you're kind of getting into this now and you're not sure, what to aim for. Should you be buying Bitcoin? Should you be buying a bunch of other stuff? Should you be buying Dogecoin and kind of how to allocate within the portfolio, how much risk you want to put, and all that stuff. So we're going to start off with kind of just figuring out, first of all, the first thing you guys need to know when you're doing a portfolio and building it from scratch is, number one, and we talked about this before, number one, you need to know your time preference. Meaning, do you plan on holding this portfolio for a long time? Or do you kind of just want to build a trading portfolio? Or, what's the time preference? Because that matters a lot. Like if you're thinking, oh, I want to build something that I can hold for a very long time without touching it, well, maybe then you shouldn't be looking at altcoins at all. Maybe you should just be looking at Bitcoin. And maybe you should be putting in, we're just talking about crypto portfolio here. Yeah, and that's actually a good question. So if you're talking about long term, so long term for me personally, and this varies from other people, but long term for me means I hold it until peak market, right? And that could be from where we are now. That could be a year, maybe 2 years, or maybe we go in one of those really long extended, things, and then you've got to be ready to hold whatever you've actually put into the portfolio for that long. If you're thinking long term in the same way I do. And the reason to why I think long term is until peak market is because if it's still going up and continuing to go up, then what's the point of getting rid of it unless you need the cash for something, right? And so if you're thinking, let's do the long-term thing as an example. Let's do my portfolio. I'll give you my portfolio structure and my allocations. Oh, not exactly my allocations, but as close as I can, because I don't know the exact numbers right now in my head, because they change, because I calculate it in percentages, right? So let's see what David said here. BTC to hold around 50% of portfolio. Actually, that's how my portfolio started, Dave. So Bitcoin to hold 50% of the portfolio. The reason for this, for me, when I did my structure, was I thought, okay, I'm a long-term investor. I'm thinking long-term, and I just explained how that works in my head. But long-term means I need to be able to feel comfortable buying something and holding it for a very long time. And, if I was to go and buy something like Doge, that doesn't really fit my long-term portfolio thinking, because Doge for me is something, Dogecoin or Shiba or whatever, Bonk or all these meme coins. For me, that could be like, oh, I see a trade opportunity. I'll get in and then I'll get out as soon as I see it slow down, right? That's not a long-term thinking thing, right? So if I were to just go over my structure here, it's actually quite easy. So my crypto portfolio, the long-term one, or actually let's do my whole thing. I have a crypto portfolio thesis it's two pieces. One is a long-term bag, which is large, and then I have a trading account on the side of that, and that trading account can never be worth more than 10% of my portfolio. I hope that makes sense. Because if I trade and I earn more than, so it's worth, let's say 12%, I pull out those 12% and then I put it into my long-term bag, right? And yeah, Kavik is right. Don't forget to share the stream and leave a like and all these things. Let's get the word out there. I'd appreciate. But yes, so if you take your long-term thesis and you say, okay, I want to build a structure. So for me, my goal is to have 50% of it in Bitcoin, right? The main reason for that is because in crypto terms, Bitcoin is low risk compared to everything else in the space, right? So I go 50% is safe. It's still going to be volatile, of course. It's Bitcoin after all. But within the crypto space, Bitcoin is the least risky thing to get into, arguably. So for me, I structure it like that. I go 50% Bitcoin. That's the goal. I want to try to maintain that. But during a bull run like this, the numbers will kind of just go all over the place, and you'll end up with 47% Bitcoin, and something else might have, moved a lot more than Bitcoin. And that's fine, right? But the goal is to try to hold it with 50% Bitcoin. That's my goal. My second, my 25% piece of that is Solana at this point. So Bitcoin for safety, and then I go I try to find the best large cap layer 1 smart contract platform. A smart contract platform means it is essentially a platform, a crypto, a blockchain that other projects can build their token on or their project on top of, right? So you want that base layer. So that's my 25% hold. So that's Solana in my case. It could be ETH for others. It could be Avalanche for some people. But that's essentially it. So Bitcoin, and then Solana or another smart contract platform that you like. And then the rest, the 25%, the other 25%, I've personally kind of split it across, I think it's 5 or 7 altcoins that are really low cap and high risk, right? And so what that gives me in the total structure is I've allocated a large portion to the safest piece, a pretty big portion to something that is a little bit higher risk, but can have a lot more price action, so much more gains. And then you have the last 25%. I've kind of taken 5% of each and put them into different coins or tokens that are being built on Solana in this case, because if I think Solana is the biggest platform, or is going to be the most successful platform, then it makes sense to put, my other 25% into various coins that are being built or various projects that are building on Solana. Wouldn't make much sense to say that you believe in Solana as a future, blockchain, and then put long-term investments into stuff like ETH or Avalanche, where I don't even believe in the blockchain as a winner in the space. So that's how I do it. I need to find my tobacco. Oh, there it is. Us Swedes, we are really addicted to this tobacco stuff. Let's see here. Okay, Dave, you're saying, I'm going to open this. I haven't read this yet, but I'm assuming it's going to be a good one. Let's see. So, for example, if I have a set amount of $500 a month to invest, it would be $250 into Bitcoin, $250 to buy anything else. Right. Yeah, that's pretty much what I usually tell people. Like, if you have $1,000, let's say, and per month to put in, I'm just doing 1,000 because it's just an easier number. I would put in 500 into my big belief, the one that I believe in the most for a long term, that I feel is the safest bet. And in my case, that's Bitcoin, right? In your case, that might be something entirely different. I'm not here to tell you what you should buy, but the allocation should be half, or should be. I would recommend it's 50% to the lowest risk thing that you still like and believe in long term, and that's kind of like your fallback a little bit, And then I would put 250, so 25% into your second high conviction play that you like. In my case, that's Solana. In your case, maybe that's ETH or Avalanche, or I don't know, XRP. Yeah. And then, the last 25%, I would find 5 coins maybe and put 5% in each. That's that's how I structure mine. And I think that's a pretty good idea because, like I said, I also have on the side a trading portfolio, which I try to grow up to be worth 10% of my big bag. And as soon as it's worth more, I take out a little piece and I chunk it into that one, right? And then I keep building that. So that trading platform can be kind of the moneymaker in real time that you can start filling up your bag with. Obviously, if you're not an experienced trader, that's a very high risk thing to do. But maybe in your portfolio, you could have all your safe bets, and then you would take instead of putting some of your risk in the small place in the portfolio, you could toy around with some risk in just trading those coins that you already believe in, right? Because worst case scenario, for example, if you buy something and you're trying to trade it and it goes down, well, okay, you just move it into your long-term bag and it becomes a long-term thing, right? So that's a way for you to kind of, if you have Bitcoin and Solana, for example, in your long-term portfolio, and then you hop over to the side and you try to trade a little bit, buy low, sell high, to kind of cash in some more, and I mean to get some cash flow basically. And then if you mess up a trade where you buy something and it just completely crashes, well, okay, you bought some more Bitcoin somewhere and it's currently crashed down. You can just hold that because you already believe in the coin for long term, right? So that kind of saves you from that, oh crap, I have to sell it before I lose more type feeling, right? So it would just become a bad buy, or a bad trade would just become a longer term hold. So you would just move it into your long term bag, right? So that's something that you could possibly do if you want to get into trading, and learning that, because that takes a lot of nerve. That's the biggest thing, the trading part of it. But again, like I said, I think, when you're saying you want to split it into two, or two pieces, the 50% goes into Bitcoin, and then the rest goes into whatever you feel like, whatever you like, and that would probably be a pretty good idea, I would say. I really don't mind that. That's sort of what I do. Okay, so here's a great question actually from Iakan. So how do you find those smaller cryptos to invest in? So something you really got to do is you got to make sure that you do some proper research. And there's a lot of, I'm going to swear, there's a lot of bullshitters out there that talk a lot of shit, right? You would see on TikTok and Instagram or whatever, you're scrolling through, you're tired, maybe you're on the throne having a, after work dump, and you're scrolling and you see these people go like, oh, XRP is going to 50,000 per coin. And then, people who don't know anything about it, they go, last time I checked, XRP was worth 60 cents. I want to buy XRP now because it's going to go to $50,000. And it's just, I don't even, yeah, it's not good. So finding those 25%, like if you're dedicated to finding something great, you're going to have to really dig, right? And don't listen to, shillers on TikTok and YouTube. Don't even listen to me. Like, I'll give you what I like and how my portfolio is structured. But that doesn't mean I'm right. I could be completely wrong. I mean, I bought something called Soul Chat a couple of days ago, 2 weeks ago, maybe. And that went up a lot. Maybe that was just pure luck, but I did, dig into it and look at it and said, okay, this looks like an actually good project. What I do is I look for disruptive tech, right? I find something that might be able to replace something that already exists in crypto. For example, how I believe that Solana can replace ETH, because they do the same thing. Solana just does it much better than ETH. And so far, that's proven to be a fairly good move, right? But you can also find stuff like Python network on Solana, which it's also built on Solana. Python network does the same thing as Chainlink does, but it does it way better, way faster, way cheaper. So I look at those two together and I say, yeah, Pith looks good to me, right? I remove Chainlink from my portfolio and I replace it with Python Network. And that's how I find these things. And again, I could be completely wrong about Python Network. It could just, do some stuff during the bear market and then never come back. You never know that. But if you do your research properly, then you can actually have some conviction in it. And then if your research wasn't enough, at least you did the research. You didn't just listen to some random dude on the internet saying, buy bonk, buy, these NFTs, buy this and that. That's the hit rate of those are small, right? The hit rate of you digging through data and actually doing the work, the hit rate is much larger. Maybe it's 1 in 10 instead of 1 in 100, but it's still very much a better technique or a way to go about it. Oh, guys, you're writing so much. I love it. Oh, and hi, Gusha, and hey, hi, Lynn, by the way. I saw you there. The grifters, yeah. Moonboys and grifters, scammers, ruggers are all over the place. Yes, they are, for sure. It's amazing booby traps. Yeah, Kavik's completely right. It's a minefield out there. So I'll actually show you something. For those of you that are new to this, there's this website, this really great website called coinmarketcap.com. And they have just basically a big list of every single crypto that's in the space right now. And I think it's like they used to have a number up at the top where they showed how many coins there were that was registered to the website. But they don't have that anymore. And I don't know if it's because there's just too many. But I remember looking during the bear market, it was like 27,000 or something. And since then, there's definitely more than that. I would say probably more than 50,000 different cryptos. So just the chance of somebody on TikTok saying, "Oh, this new coin, buy this and you'll make $50,000 in 2 minutes." Like, yeah, the chance of that happening is fairly slim, right? And I would actually suggest as well, this is not financial advice, but this is just kind of a pro tip. If you're new in this and you're looking for something good to invest, if you're on this website and you get to the bottom of the first page, don't go to the next page, just leave there. Okay, even top 100 is not, I wouldn't even go that far. I would say top 50, top 25, start there, see what's around, and then maybe move down the list a little bit and then start digging. I would also say it's a good idea to look at the ETH ecosystem, look at new stuff that's being built on ETH, look at new stuff being built on Solana, on BNB, new stuff on Avalanche, and things like this. You might be able to find something that you like, and then you can put, 5% of it. Because if that 5% gets burned, it's not a huge deal. Yeah, you've lost 5% of your bag, but since you have really great names in the rest of your bag, that will kind of save those big ones. Will probably recuperate those losses that you make on the 5% play where you take a big risk, right? So for sure, go in and just click on everything. Like if you click on, say, BNB right here, you get to this page, right, where you can just look at everything. You can see price history, you can see market cap, price history. You can look at it like this. You can even look at it on a log scale. You can see where you can trade it. You can see some news here. The about section, there's a bunch of information there, and so on and so forth. And it's just really great to just look through this and just see what's out there if you're new to this, and just get like a wide understanding of just what is this space really. So that's what I would probably do if I'm looking how to get into this properly. I'm gonna try to catch up with this chat, by the way. Because Dave, this is actually because I did mention trading. So if you're just looking, if you don't have like a bunch of time, because honestly, trading is very hard, and I don't think it's possible to be a good trader if you don't know the space and you don't know what you're trading, right? So that's why I tend to tell people, um, get into the investment side first and do that for a whole cycle, like 4 years. Spend 4 years just be in the space, look at everything, learn what they do, because it's much easier to make profits as a investor that has done some homework than trying to jump in and trade. And I'm sure that Kavik, Rob, and I know Yakan, for example, he already understands that, and he's been sitting down with me in the Discord learning some tricks for trading, that it is very hard to trade, right? Even if you have experience, this space is kind of nuts. Okay, so I would say just do spot investments, buy spot, and then leave it at that until you feel comfortable doing your own TA, right? Because if you can't find a good buying opportunity on a long-term scale, like the daily charts, if you can't find good entries there, then you're not going to be able to trade the 1 hourly, the 5 minute. It's not going to happen, you know? So I would say definitely stay away from the trading section until you feel like you can sit down at your computer every day or every week, do some technical analysis using a bunch of different tools, and then be comfortable doing that and saying to yourself, like, when you start noticing that you're like, oh, here's a great opportunity, I'm going to get some Bitcoin here. You buy and it goes up in the coming weeks. Then maybe you can start saying, okay, maybe I can do this on a shorter time frame, which would basically translate into trading, right? So that feels to me like that's solid advice. And it's not financial advice, it's just a friendly pro tip, okay? I can't believe we have to say that, no financial advice. But hey. Okay, let's see. Lynn, you said people are still sending crypto to random wallets because they advertise new token preset. Yes. This is like a major warning. If you see something out there, and this is good that you brought this up, actually, Lynn. If you see somebody out there saying, oh, send, the classic one is, I think, oh, send whatever to amount of ETH or Bitcoin or Solana to this wallet, and we'll send double it back plus a pre-sale token. And it's like, nah, no. But unfortunately, a lot of people fall for that, and that sucks. So yeah, don't do that. Dave. Okay, scrolling. Let's see. I haven't read this one yet, but I'm gonna read it out loud. So Resi, nice picture, by the way. There is a funny meme, by the way, that I just thought of seeing that picture from the what's the movie called again? 300. When he kicks the dude down the hole and says, "This is Sparta." There's one of those that you can use on Discord where it's basically a Bitcoin dressed as a Spartan, and he kicks the US dollar down the hole and says, "This is crypto." It's just hilarious. Love that one. Okay, so let's see. I barely know anything about Bitcoin, but isn't it deflationary in its nature due to its fixed supply? So only time to actually make money is during the halving. First of all, no, you're not dumb. Okay, so first of all, you can't know what you haven't learned, yet. So it's like you're not dumb because you haven't learned something yet. Okay, so don't think like that. Okay. So here's the thing. It's not deflationary. It is inflationary, but the inflation is a set number. So every 4 years during the halving, that inflation rate is cut in half. So currently we're getting 900 Bitcoins per day, approximately, into circulation from everybody mining Bitcoin. And in about, I do have the countdown clock here, actually. Oh, you can't see that. Hold on. There we go. So in about 24 days and 6 hours and 40 minutes, we're going to have block number 840,000 being mined, which means it's going to have the supply from there, or have the mined supply in the next 4 years coming up. So where was I? There we go. So what happens then is, yeah, it's going to get more scarce. So currently the inflation rate is, I think, about 9.8%, something like that. And then after the halving, that inflation rate is going to drop to 0.85, 0.9, whatever percent, which is then lower than the inflation rate of gold. And then the next 4 years is going to, give us that inflation rate, and then we're going to have it again, which brings it down even further. So it becomes scarcer. So the deflationary part of this that you're talking about is that a lot of people lose their coins. They actually accidentally send their Bitcoins to the wrong wallet, or they lose their seed phrases or anything like that. And then it's all gone, right? So if you add that to the equation, then yeah, it's deflationary. So there's probably around 5 million Bitcoins that have been lost over the years, because people lose their hard drives with thousands and thousands of Bitcoins back in like 2010, 2011, stuff like that. And it's nothing we can do about that, really. But so that's how it kind of is deflationary. And if you also say that, when everyone who's buying and holding, who's planning on never selling, for example, ETFs that are probably going to hold like once something goes into an ETF, eventually those Bitcoins that are in there are not going to really move at all, because they're holding Bitcoins for clients, and maybe some clients get out, but some other clients get in, so they don't have to get rid of those Bitcoins. So if you add that to the equation, maybe you shouldn't, but then yeah, it's definitely deflationary. But mechanically, it's not. Okay. And you can definitely make money anytime during Bitcoin. Since 2023, since the start of 2023, it's up. Oh gosh, I have to measure this. Hold on. And I'll actually share the screen for this. So since the bottom of the bear market, which was basically the start of 2023, Bitcoin is up 333%. So I'd say it would probably pretty easy to make money there as well. And I also noticed something else, by the way, for you guys who watched yesterday. Just real quick, if you were watching the stream yesterday, I drew some lines yesterday, and currently it looks like it's sort of playing out, at least. But we'll have to wait and see if it actually goes up from here or if it comes down. But that's kind of funny that it kind of dissed my prediction right away and just went up. Then now it's falling down a little bit. But hey, it is what it is. It's still doing what I thought. 69K, right? Let's see. I'm gonna scroll a little bit more here, see if I find something. Gusha said, "Yeah, boy, you're dumb." I'm not sure if you're talking about me, but I hope not. Let's see. How much BTC already lost? Yeah, about 5 million, something like that. Yeah, because look at Satoshi's wallet. The creator of Bitcoin. His wallet has over 1 million Bitcoins in it. It's 1,040,000 something. And he's missing. It's been missing since 2010. So there's that. So just that wallet is 1 million. Okay, yeah, actually, Dave, that's a really great question. I actually brought this up to Iakan yesterday. And so on the website that we were just talking about, which is CoinMarketCap, not sure I should show this, because if I click on it, it's going to show my portfolio. But on the CoinMarketCap website, if you make an account, there's a portfolio button right here that you can click on, and you can use that to kind of keep track of your own portfolios. I'm not going to click that now because it's going to show my portfolio, and I'm not really sure, I should go live with my entire bag on the screen. Um, so you would just, every time you make a purchase, you would add that to the portfolio. You type in your what you bought at, how much you spent, and then it would add it to the portfolio, and that way you can track um, you could track your profit and loss and all these things over time. So it's actually quite nice to have that. So I would say that's a pretty good idea. I personally use it. I wouldn't really recommend anything that I'm not using myself. If that makes sense. And by the way, we have had a talk in the Crypto Talks team between myself, Rob, and John and Jay and everybody, and we agreed that it doesn't matter if you're never going to see us shill something that we don't actually like, okay? And we're never going to do it for money either. So I don't care if there's some shitcoin that comes up to us and says, hey, we'll give you $100,000 to say that people should buy our coin. We're basically just going to slam the door in their face, because no, not going to happen. So, and if you want to trust me on that, then if you don't want to trust me on that, then oh crap. Well, you do you. Okay. Let's see. Yeah, this is actually not a horrible idea either. From Cav here. So for the as of the the last 25%, keeping it in stable coins. In case, and that's something that I kind of keep, like I keep my own stable coins outside of the main portfolio, because it's not an investment, right? It's just cash holdings. So I tend to try to hold, like I said, instead of holding cash for me, I hold a trading account. So if you replace my trading account with just you filling up your cash bag every month and waiting for a good opportunity to buy for your long term, that would be definitely a great idea. And it's certainly not a stupid thing to do, right? So like if you're holding during a bear market, for example, and you're filling up your cash bag, or your the bag you take from to add to your main bag, if you keep adding to that and you put it onto an exchange, for example, and don't necessarily recommend this, but just holding the dollar, kind of boring, right? But if you hold USDT, for example, and I know on KuCoin right now, you have about 12% interest on that, right? And if you're going to hold for a year and you keep filling that bag up, waiting for the bear market bottom to come in, then why not just lend out your dollars so that people can trade with them during a bear market and get 12% for it? I mean, that you're not necessarily going to get 12% all the time, but if you're getting 5 to 12% on a fairly regular basis, that's great. And that's APY or APR, over the course of a year. So that could be something to do as well. Let's see. Right, Dave. Yeah. So for portfolio creation, if you just want to track it, CoinMarketCap is great, right? You're not holding it there. You're just tracking it by putting the numbers in so that you see what you got and your profits and all that. But if you're completely new to this, which I know you're not, but my general rule is I don't hold more than an amount that I'm comfortable with on an exchange, because exchanges in the past, we've seen stuff like FTX happen, right? I don't necessarily hold more than 10% of my holdings, the value of 10% of my holdings on an exchange at one time. It's my trading account that's there. All my other stuff I hold on cold wallets, and I don't have everything in one cold wallet either, right? So I have my Bitcoin holdings split up into various wallets. I have my Solana holdings split up in various wallets. Some render is sitting over here on this exchange. So I tend to just move the risk out to a broader space so that if something happens, I'm not going to lose all of it. So that's certainly something to think about. And when you say, exchanges, cold wallet, and DEX, so with a DEX, you're essentially holding whatever you interact with on a DEX is going to be a hot wallet, right? It's going to be a wallet that you connect with and you use. It's online the whole time. So holding a big portion on something like that is probably the riskiest, because if you think about it, something like KuCoin or Binance or Kraken, for example, when you hold stuff on Kraken, I know that they have the biggest security team out of all the exchanges. Maybe they don't still, but as far as I know, they have a much larger security team and they take that very seriously. So, and they have insurance too. So if something does happen, your stuff is insured, right? If you're holding it in a cold wallet, the only fault line, or whatever you want to call it, is going to be you losing your seed phrase. Are you going to lose your seed phrase? Who knows? It could happen, right? But if you're holding in a hot wallet, which is basically a cold wallet that's connected to the internet and that you're connecting to a decentralized exchange with, there's going to be transactions going on back and forth there, and you're going to be getting, fake airdrops and stuff to that wallet quite often. And if you click on the wrong thing, that wallet is wiped. Sure. Yeah, tip of the day, write down your seed phrase in a diary. So actually, I've gone even further because I'm a crazy person. I have my seed phrases stored here. I also have it in a book that's hidden. Not all of it is here. Actually, none of it's here. But I also have a titanium plate to my biggest cold wallet that's hidden where I won't say, but it won't melt and it won't erode. I feel like that's pretty safe. The story of seed phrase. Maybe I'm just going overboard with it, but hey, I'm kind of a geek. Yes, Toki, thank you. I do have titanium. How are you doing? I thought you weren't gonna show up, Toki, but you did. So, yay. Okay, so this is a great one. Do you only have 3 chances to log into the cold wallet and then it closes forever? So the way it works is that you can, if you get a seed phrase, the seed phrase is connected to your address, essentially. I'm going to simplify this. It's connected to your address, or to your wallet address. The wallet isn't an application you download or anything. It's basically the seed phrase. That's the wallet that's connected to that address where you put everything on, right? So if you have your wallet on your phone and your phone explodes, your wallet is still safe because you have the seed phrase. So you can just get a new phone, download the application again. I'm talking about something like Exodus, for example. And then you just open the app and it says, would you like to create a new wallet, get a new seed phrase, or would you like to open an existing wallet? And then you click on that. It will give you, here, put your seed phrase in. You put your seed phrase in and it opens that address for you in that wallet, right? That's how it works. So it's very confusing for a lot of people, that especially if you're new to this space, but your wallet is your seed phrase. That's what it is. It's just a series of 12 to 24 words, which is essentially impossible to hack, right? But yeah, that's... I mean, no, my seed phrase is not under my mattress. It's definitely not under my mattress. I mean, oh no, you caught me. But no, it's not there. I promise you that. You can look if you want. Actually, you can. I can tell you where I live. Yeah, there are ways, like Toki was saying, there are ways to kind of help you depending on the situation if you lose your seed phrase. But you still have your wallet, for example. If you have your hardware wallet and you forget you don't know how to get into it and you lose your seed phrase, there are ways to kind of work around that. Usually that would cost some money. And I'm sure there's people that can help, that basically white hat hackers that are able to eventually get into something like that. I think I've seen one video, and I know there are people that can do it, but it's very difficult to do. So Unciphered, a company with a lot of tech in this space, they can help you. Yeah, yeah, exactly, and it's at a cost. Never heard of them before. So, but I'm sure there's always a way to do something. But you do need your wallet at that point. If you just say, "Oh, I lost my hardware wallet and my seed phrase," like, sorry, bruh, can't do anything. So anyway, I hope that kind of helped you in terms of what you can do with the structure. Like I said again, like I'm just going to reiterate everything that I kind of went through, and then we're going to kind of end this. Unless you guys want to stay and hang out for longer, I can sit here for a bit longer for sure. But if you're looking at how to build your portfolio and you're unsure how you want to structure it, just think about it this way. I'm new. I should try to be safe, okay? And along the way, when you're learning, you're going to find other stuff that you might want to get into, and just start structuring according to that. But try to, like I said, maybe you want to make sure that you have 75% be in Bitcoin or something, right? But then you also should probably look at outside of your crypto portfolio and say, what else do I have that I've invested in? Do I have any stocks? How did I structure that? Do I have a bunch of random stocks? Random Swedish companies, for example, that a lot of Swedes have, when they should have invested in big companies like Tesla or Google, right? So if you look at your stock portfolio, if you have one, maybe you want to structure your crypto portfolio according to how your risk and your time frame is looking at inside of your stock portfolio as well. But the main thing is figure out your time preference and figure out your risk tolerance, right? And then kind of adjust your allocations accordingly, right? That's the best tip I can give you. And it's all up to you at the end of the day, right? It really is. I've given you my way of doing it. Maybe that's not for you. I know it's certainly not the way that Rob, for example, the co-host that's usually here but decided to go to Thailand, he does it differently, and that works for him. That's because he's following his own preferences, right? I follow mine, and you should definitely follow yours as well. But and yeah, Cav, you're right. We can all join the Discord and hang out. Yes, we can, for sure. And I think that's probably what's going to happen here. So with that said, if there are no really pressing questions, we can just wrap this up, jump into Discord and hang out. If you haven't joined it yet, by the way, you need to join the Discord. You need to follow us on TikTok and Instagram, and we even have a YouTube Shorts channel where we do some clips there. Same clips as we put on TikTok. So, but still. And the Discord is the big one. That's where we kind of network. Everybody networks, talks, gives each other help, and all these things. And yeah, like Cav says, make a plan and stick to it. That's don't fall for FOMO or FUD. FOMO being fear of missing out, and FUD being fear, uncertainty, and doubt. Usually, all of that's just noise. And the great thing about I'll do this. The great thing about really digging into your long-term portfolio and making sure that you know exactly what you're buying means that the FOMO and the FUD part, the fear of missing out and the fear, uncertainty, doubt aspect of investing kind of disappears. Because if everything you have in your bag is super high conviction to you, then somebody saying, oh, this is going to You're just gonna say, no, I know that's not gonna happen, so I'm fine. I'm not gonna freak out and sell, and then, then that's that. So for sure, do your research. CoinMarketCap is a great site to start doing some of the, the first initial research, and then after that, there's other places to go to as well. YouTube is actually quite good if you find the right people, and the only ones I can recommend is, well, us, because we don't talk, we don't just say random stuff, and there is Invest Answers on YouTube, very good. CTO Larson, very good. Coin Bureau, pretty good. And this is obviously my opinion, but yeah, it's hard to find really good stuff. It might all sound really good when you're listening to people talking about stuff, and because they're basically giving you only the good pieces, but they never talk about the bad, which is so dishonest I can't even begin to explain it. You want to follow somebody who's bringing up all the positives and all the negatives the same. If you just talk about the positives and ignore all the negatives, no go for me. And yeah, do your own research. All right, we'll see you in Discord, okay? I'm gonna jump straight into the lounge there. I'm sure someone is already sitting there, but we'll end it here, and I hope this helped. This is kind of a weird hangout thing, and I kind of like it. As long as everyone's talking and hanging out, it's good. So I'll see you in Discord. Like, follow, subscribe, all that jazz. All right, cool. Bye.